G'day guys, how's it going? So this video today is on an issue that I've seen multiple people have. It's to do with using a limit order and it filling straight away and not understanding why that's happened. And it basically comes down to not understanding order types, not understanding how to use certain orders and when to use certain orders, and just how the order types themselves actually work. So we'll come have a look at TradingView, and I'll give you an example. So the person this morning had tried to sell below the current price. So let's say that they were looking at this 30,000 level and they're like, if it gets below 30,000, I want to sell. So what they'd done is they had gone to the exchange and put in a limit sell at 29,000. So if we do that, we come to BitMEX and we say, all right, we want to sell at 29,000. Well, BitMEX says the order is fully filled, right? It's automatically acted as a market order. Now, that's not what we wanted, but it's because we told BitMEX the wrong thing. We didn't actually tell BitMEX to do what we wanted to do. BitMEX has done exactly what we told it to do, right? We just told it the wrong thing. So what's happened there is I like to think about it in terms of like, if you're trying to sell a car. Let's say that I've got a Toyota Hilux and I'm happy to sell it for, I say I'm happy to sell it for 40,000. Someone else is looking to buy a Toyota Hilux and they're happy to pay 50,000. The second they see one selling at 40,000, they're going to snap that up, right? They're going to be stoked. And essentially that's what's happened here. We've just told BitMEX we're happy to sell for 29,000, but there's currently buyers up around 32,000. That's why the price is at 32,000 at the moment. So BitMEX goes, okay, there's an overlap here, right? Those people agree on price. They're happy to sell down here. They're already buying up here. And so it automatically matches your sell with the current market buys in the book, or the current limit buys in the book, but it market sells your sell, right? Which is good for you. The exchange is doing you a favor because if it executed at your sell price, remember you've said you're happy to sell for 29,000, you'd be losing 11, 12%. So what a limit sell does, sell limit, is it says right now I'm happy to sell for this specific price, right? Right now I'm happy to sell for 29,000. So if you're selling below current price, it's going to automatically fill because you're telling the exchange that you're happy to take that price and it's got buyers above that price. Whereas if you put it above current price, then it won't fill because you're saying I'm happy to sell for, let's say 40,000. I'm happy to sell for 40,000, but there's no buyers at 40,000, right? Currently the buyers are at 32,000. So until price gets pushed up there, your order will just sit there waiting. Now, the next order type is a market, right? So sell market. So a sell market will just execute with whatever limit buys are in the book. So let's say that you market sell $100,000 worth of something. It will just fill $100,000 worth of volume on the buy side to whatever price that gets to. Excuse me. And so that's what's happening. When you're saying you're happy to sell down here, the exchange executes that as a market order because you've said you're happy to sell for a lot less than the current price. So the exchange goes, if I get them the current price, I'm getting them a good deal. And so it acts as a market order. Now, what you actually want to be doing, right? If you want to sell, if price gets down here, what you want is a stop order. So a stop is a conditional order. You're saying, if this, then that. If this thing happens, then do this. So in this case, what you're saying is, if price gets down to 29,000, then sell. And so for that, you need a stop order. A standard limit order won't do it. It'll just automatically fill like what we just saw. So what you want to do there is use we'll go with a stop market first, right? So a stop market says, if price comes down to this specific price, so in this case, 29,000, then I'm happy to sell at whatever price people are currently buying. So if price hits 29,000, market sell, right? Take whatever you can get, market sell. So you can see if we come over to BitMEX now and we go stop market and we set that at 29,000 and we execute it, you can see now that's worked, right? That's just sitting in the books waiting and it won't do anything until price gets to 29,000. Then it'll execute our market order. The other type of a limit order is, of a stop order, sorry, is a stop limit. And the difference here is when your if condition is satisfied, so it hits your trigger price of 29,000, instead of market selling, then it allows you to put a sell limit into the books. So this is useful. I don't personally use it for this, but it's sort of the easiest way for me to conceptualize it. Let's say that I wanted to say, all right, if price hits 28,000, then I want to put a sell in the books like this. Now, that should look familiar to everyone, right? That's a retest. That's sort of what you're banking on. So what you're saying there is if price hits 28,000, then put a sell limit at 30,000. And like I showed before, if the limit's above current price, which price will be 28,000 when this is executed, that'll just sit there waiting until price comes up to hit it. So if we come to BitMEX and we say stop limit, our stop price is our trigger price. That's 29,000. That's when we want, or actually we had 28,000 in that example, 28,000. And then our limit would be 30,000. Right, so same thing. You can see that that's now waiting. It hasn't executed immediately because it's an if-then condition. If price gets to 28,000, then place my sell limit at 30,000. Now, you might notice that both of my stops said if price comes down, right? And my stop market, if price comes down. And you might be thinking, well, what about if I want to place a sell if price goes up? Well, the trick there is you don't actually need to use a stop order because, like I said at the start, if we try and sell at 40,000, there's no buyers there. So until the buyers get there, we can just have a limit order sitting and waiting, and it won't execute until there's buyers there. Now, obviously, all this is literally just reversed for if you are trying to buy above current price. So let's go to a buy limit that says right now I'm happy to buy for this specific price. So if you wanted to buy, if price got to 40,000, you couldn't do that right now with a limit order because it would automatically execute because people are currently happy to sell for 33,000 and you're saying you're happy to buy way up here. So the exchange will go, all right, those guys are happy to make a deal and it'll sort you out. Obviously a market buy is sort of the same as a limit buy but reverse. So, you know, it's just going to take whatever sell liquidity is there up until your like position size is filled. And then the stop market buy is, you know, if price gets to 40,000, market buy, stop market, stop limit buy. There's a lot going on right now. Stop limit buy would be the, if price gets to 40,000, then place my buy at 38,000. So I'll make a little, probably like a Google Doc or some sort of cheat sheet with like the order type so that you can refer back to that if you need. But I hope that explains how they actually work and helps you avoid making that mistake with the placing a limit order and having it execute as a market. But the easiest way to avoid it is, even if you don't understand order types, right? As long as you use this post only box, you can't make that mistake. The exchange won't let you. So like if I try now and sell at 29,000, so we saw before when I placed a limit at 29,000, it executed as a market because I was saying I'm happy to buy below current price. If I tick post only and I hit that, order was post only, couldn't execute because of submission. So what post only does is it ensures that your limit orders can't act as market orders. They only like are processed if they would go into the book, and orders that go into the book aren't market orders, right? They're limit orders. So let's say that I put in a sell at that price now, we can see that going to the book. But if I was to drop it to, let's say 33,133, I've got my post only ticked, I try and sell, and it doesn't let me because I'm trying to sell below current price, and that would automatically fill. That would act as a market order because I'm saying I'm happy to sell below current price, and there's currently buyers at that price. So we're in agreement, right? There's an overlap between what we're happy to pay, what we're happy to exchange. And so the exchange, that's where the name comes from. does that deal for us. Right, that's everything I wanted to cover. So I hope that made sense. I'll make a little cheat sheet and slip that into the comment section somewhere. So if you want to refer back to that, you can. But I really hope that helps clear up, because it's an issue that I see all the time, and it's understandable, right? I honestly think when you're starting out, learning exchanges is hard. There's so much going on, so many different order types, like I've just shown, so many different aspects to it. So, you know, if you're making this mistake, don't feel bad. Don't think you're dumb. It's super common. That's why I've done this video. So hopefully this helps people out. So yeah, hope you guys are doing well in your trading, and have a good weekend or weekday, depending on whenever you're watching this.